What is going on, everyone, and welcome back to Explain the Charts. Today is October 10th, 2025, and we are taking a close look at Meta Platforms, ticker symbol Meta. There is a ton of news and extremely bullish sentiment surrounding this stock right now, so first we'll break down the headlines and fundamentals. Then, we'll dive deep into the charts to see what the technicals are telling us and where the price might be headed next. Fundamentally, the story for Meta has completely transformed. After a massive 76% drop in 2022 due to heavy spending on the metaverse, CEO Mark Zuckerberg pivoted hard into artificial intelligence. Since that pivot, the stock has surged over 680% from its lows. Recent news reinforces this AI-driven success story, with Q2 2025 earnings blowing past estimates, showing a 22% year-over-year revenue increase. Ad impressions are up, the price per ad is up, and even the Reality Labs division is narrowing its losses. Analysts are overwhelmingly bullish, with a consensus strong buy rating and an average price target of $853, implying significant upside from current levels. Some of the highest price targets are reaching an incredible $1,100, with analysts believing this is achievable next year if AI continues to boost financials. This optimism is backed by strong institutional confidence, with major players like the world's largest sovereign wealth fund, Norges Bank, reportedly increasing their holdings. Interestingly, while data shows significant insider selling over the past 6 months, this has been offset by net positive accumulation from institutional investors and more buying than selling from members of Congress. The core driver is AI's impact on their ad business, with reports suggesting AI has improved ad performance by 30% year-over-year while dropping the cost per conversion. With the next crucial earnings report scheduled for October 29th, the market is anticipating another strong performance. Many believe management's guidance has been conservative, potentially setting the stage for another beat-and-raise quarter, which could restart the rally in a big way. Now let's see how this powerful narrative translates to the price action on our daily chart. We can clearly see a strong, established uptrend throughout 2025. One of the most significant events is this massive gap up right here at the end of July. This directly corresponds to that blockbuster Q2 earnings report we just talked about, where the stock leaped from around $700 to over $770 literally overnight. This explosive move pushed the stock to its 52-week high of $796.25 on August 15th, which now stands as the key resistance level to beat. After hitting that all-time high, the stock entered a corrective phase, pulling back and consolidating. We saw it find some initial support around the $750 level in late August before falling further. This brings us to the more recent price action, where things get very interesting. In late September, the stock took another leg down, breaking below $740 and finding a bottom right around the $690 level on October 6th. This $690 to $700 zone acted as a critical support level, and buyers stepped in aggressively. Since that low, we've seen a very strong bounce, which corresponds with the news of a recent multi-day rally. The price has reclaimed the $730 level, but now it's running into a potential area of resistance from the consolidation seen in late July. The stock is currently in a battleground zone. Bulls want to see it hold above the $720 to $730 area to prove this bounce has legs. Bears will be looking for a rejection here to suggest a retest of the recent lows. Let's switch over to the 1-hour chart to get a better look at this recent rally. Here we can see the short-term structure much more clearly. Notice the series of higher highs and higher lows since the bounce from the $690s. This is a classic short-term uptrend. The price gapped up at the open yesterday on October 9th and pushed higher throughout the session, showing strong buying pressure. It closed very strong near $733.51. Based on pre-market data today, it's opening just slightly below that at $732.39, indicating a bit of a pause. The key short-term challenge for bulls is to push through yesterday's high and continue the momentum. If it can't, The gap below around $718 could act as the first level of short-term support. Now let's drill down even further to the 15-minute chart to see the intraday action from the last session. Yesterday's session was a clear win for the bulls. After the initial morning push, the price consolidated sideways for a few hours, building a base around the $725 level. Then, in the final hours of trading, we saw another strong surge of buying volume that pushed the price to close at the highs of the day. This end-of-day strength is a bullish sign heading into today's session. For day traders, a break and hold above yesterday's high of $733.51 would be a bullish continuation signal. Conversely, a failure to hold the $725 support area from yesterday's consolidation would be a short-term bearish sign, suggesting the rally might be losing steam. Okay, let's switch back to the daily chart to recap and look ahead. To summarize, the key levels we are watching are clear. Major resistance is at the all-time high of $796.25, with minor resistance zones around $755 and $780 on the way up. On the downside, initial support lies around $720, followed by the critical zone of $690 to $700. A break below $690 would open the door to a test of the 200-day moving average, which news reports place around $668. So, what's our unbiased outlook? Given the powerful fundamental story, overwhelmingly positive analyst sentiment, and the strong technical bounce-off support, the bullish scenario seems more probable. I would place a 70% likelihood that the stock continues its upward momentum toward the $750 to $760 resistance area leading into earnings. If the October 29th earnings report is another beat and raise, a retest of the $796 all-time high is highly likely before year-end. This bullish case is reinforced as long as the price remains above the $710 support level. The bearish scenario, which I'd give a 30% chance, would be triggered by a failure to hold the $720 level and confirmed by a break below the recent low of $690. This could be sparked by a market-wide sell-off, negative macroeconomic data, or, of course, a disappointing earnings report. The key event to watch is undoubtedly that October 29th earnings call. The results and, more importantly, the forward guidance will likely dictate the trend for the next several months. So that's our deep dive on Meta platforms. Keep those key levels on your chart and be ready for potential volatility around the end of the month. As always, please remember that this video is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.